In this video, I'm going to be breaking down the 3MA breakout strategy. Now this breakout strategy, I only use it for when I do not see any supply or demand setups in my charts or in my session that day. And there's gonna be times where price is not gonna give you a high probability clear supply and demand setup, right? So that's why you gotta be aware and be able to see price in real time and react to what price is doing in real time, right? So here we have price going up on an uptrend, right? We don't have no clear supply or demand setup, but what do we have? We have a big momentum candle pushing up. Now, for this trading strategy, I only trade this trading strategy with the trend. So I only go with the trend, right? And let's say there's a demand setup right here. Let's say this is a demand setup, right? Price broke the demand setup, making it invalid, right? Or let's say price came down but never touched the zone, right? That's when I'm gonna be looking for 3MA breakouts. So what's a 3MA breakout? A 3MA breakout is basically when you see a momentum candle or an aggressive candle that either buys or sell, and it closes from one end of the 3MA, 13MA line to the other end of the 13MA line, right? So here on this candle, since we have an aggressive buying candle and it started from one side of the line and it closed at the other side of the line, crossing it, right? This is a 3MA breakout candle. Also, we know price is on an uptrend and we have the other 3MAs under. We know price is going up and we have the 3MAs under. So now, before this candle would have closed, our entry would have been 2 or 3 seconds before this candle would have closed. And how you know to enter on this candle or not? If the candle is closing above the 13MA. If it's breaking the 13MA line and it's closing above the line or on the other side of the line, that's when you will be taking buys or taking sells or just entering the trade, right? So here I would have got in as soon as the candle would have closed right here, and my stop loss is going to be at the end of the candle, which is right here, the end of the wick of the candle, and then my take profit is going to be a 1-to-1, which is I'm risking $10 to make $10, right? So as soon as I notice this, I notice price going up one more time. I notice price going up. I notice the 3MA candles are underneath. There was a demand zone right here, but price broke it and rejected and closed above. And it gave us an aggressive momentum candle that broke the 13MA line and closed on the other side of it, giving us an indication that we're bullish and momentum is pushing that way. So now, before this candle would have closed, literally 2 seconds before the candle fully closed, I would have pressed buy. Because by the time the candle closed, the next one would have opened. And by the time the next candle opens, price could jump up or jump down or skip, right? Or just take off. And then if you're not in the trade, you just missed out on the trade, right? So as right before the candle closed, I'm getting in the trade. That's the entry for this strategy. Let's see what would have happened next. So I would have got in, boom. The next candle would have opened, we would have been in a little bit of drawdown, and then price would have came up, almost hitting our take profit 1. I would have kept holding until TP1 gets hit or stop loss get hit. Bam. Take profit 1 got hit. I would have closed out majority of my trade and then hold for 2-to-1. Boom. And then as you can see, the 2-to-1 got hit right there. You literally would have probably made more money because that one candle opened up and pushed aggressively. So if you didn't close out partials here, you would have probably closed the full trade at TP2, and you would have made a good amount of profits that day with this strategy. Mind you, this strategy, you're going to see it very often. You're going to see it very often, a lot of the times. All right? But that doesn't mean you should take every trade that you see. You want to make sure all the trades line up with confluence and price action, right? Here, I took this buy because why? Price is continuously going up. It's on an uptrend. Also, we have the 3 MAs underneath, giving me extra confluence. Plus, we have a momentum candle that broke the 3 MA, the 13 MA, from one side of the line to the other side of the line and closed above, giving us strong momentum and an indication that price is bullish, right? Not just by price action or the 3 MAs, but the candle itself as well. Let's go to another example. Here in Dix's sample, we have price downtrending, going down. We have the 3 MAs above price, and we have a big bearish candle break the 13 MA candle. One thing you might have not known is that this candle was news at 8:30. This was news, Forex news, or just market news, right? And when news comes out, if you didn't know, on the stage 1, I go over it. When news comes out, it has the power to affect the markets, right? So just because this was news, even though it broke the 3 MA, the 3 MAs are above, price is telling us that it's bearish and it's going down, I would have still not have taken this trade right here at the end, at the close of that candle. Why? Even though if it won or not, I still would have not taken it just because it's news. And news price can be very iffy or do a lot of fake outs. Right here, after news happened, boom, price just consolidated and just was going side to side, right? And then finally, boom, it hit our 1-to-1 barely, and then reversed, and then session ended, and then price just lost volume, right? So you want to be careful with that. Don't trade during news. You either want to trade before news happen, or you want to trade 30 minutes after the news take place. So like that, the markets have time to calm down and price can reorganize itself. Here, what do we see? We see price going up, down, down. It's creating higher highs. It's going on an uptrend. We also see 3 MAs are underneath, right? What do we also see? We see a demand setup right here. Boom. Price aggressively pushed up, creating a gap and breaking the previous high. And then price came down, rejected off the 50 MA, and continued up. It didn't come back down, right? So since price never came down, touching my zone, I'm already aware, okay, maybe price might not come back down, so I'm gonna be looking for 13 MA breakouts. I'm gonna be looking for 3 MA breakouts, right? And right here, since I already know price, 3 MAs is under us, price is on an uptrend, and this one candle right here came down and rejected really hard and closed above. And then we see this next candle right here that opened at one side of the 13 MA and then pushed up, even though it wasn't aggressive, and closed above on the other side of the 13 MA. That was my indication for buys, right? Even though it wasn't an aggressive momentum push or momentum candle, it was still my indication for buys, and I got in there. right? Why did I get in? Because price came down. It gave us a rejection, this big wick, indicating price doesn't want to go down, right? We also have a demand zone. Even though price didn't come and touch the demand zone, we still have the 3 MAs underneath price, indicating that we are bullish, that price wants to push up, right? And price is continuously on the overall trend is going up. So that gives me a confirmation and extra confidence to take this trade for buys. Even though that breakout candle is not a big breakout candle, but it's enough to indicate that, okay, we're going to start pushing up, or momentum is going to start pushing up, because it broke from one side of the 13 MA line to the other side and closed above. So as soon as this candle was about to close, 2 seconds or 3 seconds before this candle closed above the line, I would have got in the trade. Bam, I would have pressed buys. Let's see what would have happened. Bam, I would have went to a little bit drawdown, price rejected, and boom, right there, take profit 1 would have hit, TP1 would have hit right there, and I would have hold for TP2, and right here I got out a little bit above TP2, above take profit 2, so I made a little bit more than my original take profit was on this trade, and that's it. And I would have called that a day. Well, I did call it a day, because this was a winning trade, and that was the only trade I took that day. This was on Wednesday, December 11th, right? It's pretty simple. Like I say, you're going to see these setups everywhere. You're going to see these setups often, but just make sure that when you do take these setups, the 13 MA breakout candles, you want to be going with the trend. You want price action to line up and to make sense. And you also want the 13 MA candles, and you also want the 13 MA to be going in your favor. For example, if you're looking to buy, you want the 13 MAs to be underneath. And if you're looking to sell, you want the 13 MAs to be above. Also, let's say price doesn't reach my demand zone like it didn't here. That's when you're going to be transitioning to the second strategy. On this other trade setup that I took on Tuesday, which was the day before the other example, literally this week that I've been recording these videos, I just been taking breakout trades in gold. Since gold been cooking, NASDAQ really hasn't been giving out good price action, especially since it's fourth quarter, the ending of the year. Let's go back. What is happening? Okay, so on this example, what do we see? We see price going up, down, up, to the same level, down, right? But we see price creating higher highs. It's on an uptrend, right? We got the 3 MAs underneath. We are inside our trading session. And I already know this right here is kind of, this is a kind of like a demand setup, but it's not, just because this candle right here, brought this wick, and that wick filled in the gap from this candle. So this becomes a not high probability demand setup, right? So that's why I did not take that demand setup, because it was not high probability, since the gap was already filled on the first candle that began pushing price aggressively up. Okay, so now that I saw that, and I saw right here, price make a low and then make a new low, is going down. Price made a high and make a lower high and then made another lower high. I'm already seeing, okay, price is starting to go down, right? But overall, price is on a bullish trend, and we have the 3 MAs underneath. So now what did I say? I was like, okay, this could have been a potential demand setup right here, right? This could have been a potential demand setup. So what I'm gonna do, I'm gonna wait for the next momentum breakout candle that breaks the 13 MA line, and if it closes above with momentum, I'm gonna be getting in that candle for buys, and I'm gonna go for a 1-to-1. Let's see what happens. Okay, bam. Now, let's say you see this candle open up. Okay, you see this candle come down and then break the 13 MA line and close above. Right here on this candle itself, I would have been getting in for buys 2 seconds before the candle closed. I would have got in for buys. Let's see what would have happened. Bam. Okay, we're already in profit. Let's see what would happen. Bam. TP1 would have hit already, and then I would have just been holding. I would have closed out majority and then hold the rest of the trade to TP2. Then right here, bam, TP2 cleared. Well, TP2 clear. I think I closed majority. Oh, okay, that's TP2 up there. Yeah, I closed majority, or I think full my trade, my whole trade right here on the actual trade that I took. But TP2 ended up hitting. Bam. See right there, TP2 hit where that line is at. So if you would have closed majority of your trade here at take profit 1, and you would have hold the rest of the remaining of the trade position to take profit 2, your trade would have cleared. And guess what? You're following the trend. Price is on an uptrend. Boom. And 3 MAs are underneath. So this makes this setup valid. Right? And that's why I felt confident in taking this trade setup. And guess what? It won. I was done for the day. And price, after that, was history. Kept doing his own thing. And mind you, yes, price kept going up. I could have made more money. But at the end of the day, I'm just following my trading plan, taking my slice of the pie and calling it a day. Once I take my slice of the pie, my daily percentage goal, or my daily goal for the day, once I take my daily goal for the day, I'm done. I'm calling it a day. I'm hopping off the charts. I'm turning off the computer. It's going to prevent me from over trading, and it's going to prevent me from losing the money I already made, or losing more money than I lost already, right? So that's why you want to have limits, and you want to have goals to reach and exit. Because if you don't have a goal where to exit, then you're going to stay in the trade, and then you're going to probably leave, you're in profit, and then the trade starts pulling back. Now you didn't close out when you was at $100, and now you closed out at $5 because you didn't have a end goal of where you wanted to reach and exit out. So you always want to have an exit plan in trading, okay? And at the end of the day, this trade ended up going, and it went for a 4-to-1. So I could have made 4 times the amount that I was risking, which is great, but I don't care what it does, because I already took my percentage that I needed for the day, and the rest the market could do backflip, front flip, I don't care. So on this other example, we see price going up on the uptrend, right? High, low, high, and then right here price came down, rejected, came back up, came down, rejected, right? And if you notice, we have these wicks right here where price continuously keeps bouncing off, right? So that it's a support zone. So that is a support zone, right? Because price came up, came down, bounced off of it, and gave us a rejection wick. Came up, came back down, bounced off of it a second time, giving us a rejection wick, came back up, came down, and bounced off it a third time. So I already see, okay, 3 MAs are under us. We have a support right here that price keeps bouncing off from, and overall we're on an uptrend. So I'm going to be looking to buy. Since here there's not a clear demand zone, right? What I'm going to be looking for is the breakout candle, the next candle that breaks the 13 MA line and closes On the other side of it, I'll be getting in for buys. That was this candle right here. Even though it was small, right? It wasn't really an aggressive, big body candle. Also, the breakout candles that you want to take and focus on are the big candles that close like this, that have a big body like this one and close, right? Candles like this that just have the wick, right? It have the wick and then it just closed a tiny bit on the other side, right? Like this candle has the wick and it closes a tiny bit on the other side. Those are not candles that you want to be taking the trades off of. You want to take the candles, you want to take the trades based off big momentum candles, like this one right here, right? You do not want to take the entries of 13 MA breakout candles that look like this, that cross the 13 MA line but are short. You do not want to take those type of candles, right? Like this one. You want big body candles that show this momentum in the market, like this candle right here that started from here and it gave us a big body and closed on the other side of the 13 MA line. Those are the type of candles you want to take for this strategy. Now, since I saw price rejecting again, boom, 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 I saw this candle. It's not a big body candle, but it's a pretty good momentum candle that's showing me, okay, price is pushing up right here in momentum and it closed above. So I'm looking to get in. I'm looking to get in right here. Now, on this trade, I did not get in 2 or 3 seconds before the candle closed. I actually got in as soon as the other candle opened. That's why my entry is all the way up here, way past the candle close. But it's because as soon as the other candle opened, price skipped. And my entry was all the way up here by then. So let's see what happened. On this next candle, we're already in the trade and we're already in profit. Even though I should have been already more in profit if I would have got in when I was supposed to get in, right? And then for here, I put my stop loss. Let me see. I put my stop loss underneath the candle that broke the 13 MA. And then I went for a 1-to-1, and which my 1-to-1 would have been like right here. Boom. And let's see what happened. Price came back down, brought me into drawdown. It was just consolidating for a little bit. See, like at times, price gonna take, if there's another key. If price is taking a long time to hit your take profit, like it's doing here, then that trade might be a loser. Price is consolidating, wicking out, wicking to go to the upside, wicking to go to the downside, breaking candle lows and breaking candle highs. So price is uncertain where it wants to go, right? And right here, it literally almost hit my stop loss and took my money by like 1 or 2 points. Let's see what happened. I stayed holding the trade. I was like, I'm gonna hold the trade. I'm gonna let either my take profit get hit or my stop loss get hit. Let's see what happened. The next candle, boom. I saw this big candle come in and just hit my take profit one and went a little bit over to this last recent high. I was like, okay, I'm done for the day. I'm taking my money, closing up shop. And that was this trade right here. Now, if you wanted to maximize the most out of this winning setup or this winning trade, then you would have closed out majority of the trade position right here at your 1-to-1, close out 80% or 50%, make sure you secure profits in case price decides to come back, right? And then you're gonna leave the other portion or the runner to your TP2, which would have been right about here. This would have been your TP2. Let's see what would have happened. Okay, TP2 got hit. So right here, I would have maximized the most out of my winning trade. That's the goal of this. You want to maximize the most out of your winning trades, and you want to minimize out of your losing trades. So you want to lose less and win more. So overall, at the end of the week, even though you take a couple losses because it's inevitable for you to lose, you're still in profit, or you're still up at the end of the week, right? So let's say, okay, you got your 1-to-1 and you got your 2-to-1. Take profit got hit. But you still want to maximize the most of your trade. So now you already closed out half the trade at 1-to-1, and you closed out half of that half at 2-to-1. So now you still got 25% of your position still open in the trade, right? Because you closed out 50%, you let another 50 run, and then you closed out half of that, which is 25%. Now you still have another 25 that you could either let the trade go up and continue to take profit 3. If it keeps going, to take profit 3, so you could make that extra bread, right? This would have been take 2, right? And I would have moved my stop loss to break even, boom. So now if the trade decides to come back down, my risk is protected. So now if the trade comes back down, there's a risk-free trade. I'm not gonna lose no money because I moved my risk to break even, right? Or I can move my risk to, let's say, take profit 1. So if the trade does decide to come down and reach my take profit 1, it will automatically take me out and secure the money that I had in that level or in that price, right? So right here is a risk-free trade. We closed out TP1, we closed out TP2, and now we're leaving 25% of the remaining of the trade to hit take profit 3, and like that we maximize our winning trade. And we removed our risk, so now our risk is up here at $0. So if price comes down, it closes us out at $0, not taking a loss. Let's see what would have happened. TP3 hit, right? 3 MAs are still under, price is above. All your 3 levels that you aim for got hit. And now I would have been done for the day. I would have just called it a day, closed up shop, I'm set, because you don't know how far up price will go, right? We cannot guess exactly how far up price will go. We can only have an estimated guess. So me seeing price already reach my 3 levels that I was aiming for, I don't gotta keep looking for more, because price is not gonna continue in your favor forever. Price is not, the markets are not gonna let you win forever. The markets are designed to take your money. So they're not gonna let you win forever. Just know that, okay? So if you got a good trade and you maximize the most out of it and you reach your 3 take profit levels, call it a day, exit out, come back again tomorrow, okay? And that is the 3 MA breakout strategy. It's pretty simple. Once you start understanding supply and demand, and you can see supply and demand, you understand price action, and you understand the 13 MAs, right? You'll be able to see this strategy play out a lot, all right? But that doesn't mean you should take every opportunity that shows up that you see that you could potentially make money off from, because not all the opportunities line up, right? Not all the opportunities show you the confirmations where price might be going, right? Not all the opportunities gonna have the 3 MAs lining up the way they should. Not all the opportunities is gonna give you the correct price action indicating you where price might be heading, right? Not all the opportunities are going to be inside your trading time session. So you wanna be aware of that, okay?